Hello, gonna start in a few minutes. Hello, gonna start in a few minutes. Hello everybody. We're gonna start soon, so give me a second. Alright. So hello. So today's topic will be the breakdown of multi-time frame market structures liquidity levels and the tool and applications for it and so on. So this will be guideline kind of breakdown video regards it. So if there's any questions specifically you're interested, please drop them in the chat. So let's let it load in. So okay, so basically what do we have here? We have, so basically this tool gives you the opportunity to view multi-time frame market structures and liquidities levels and the targets. Basically obviously we are focusing on the the targets and our either reversal as a TP or either reversal for the specific liquidity levels. So the table itself, it's gonna provide you either we have false breakout or breakout on specific time frame, and either where we are in the regards the last liquidity storyline. Like over here it shows you the last liquidity storyline. Last liquidity storyline is basically like these levels here. It's this indication here, which basically means the last liquidity what we swept, we rejected, so we are bullish. So obviously if market structure is failing to proceed, it's gonna reverse. So basically let's cover some fundamental truths regards the market. As in Automa itself, we are focusing on specific single ranges and market structure. Single range, that's mean if we speak about daily range, that's single range will be single candle range, either previous range, either current range. And a simple fundamental truth regarding the candlestick is what the candlestick can only go in two directions, right? If we have a sign of strength, so obviously we can see that we will have reverse to the upside. If we have sign of weakness at the top side, we will obviously anticipating reversal to opposite side, and that's in the range rotation kind of protocol we are applying, because candlesticks can run only in two directions. So coming out of that, what creates the market structure? Like we can see this liquidity was created from this market structure point, this liquidity was created from this market structure point. So what creates this market structure slag, or this market structure slag, or this market structure slag? So market structures, pushes or legs, or how you want to say, is developed by single ranges, right? So this is daily's market structure, like the blue highlight, that's the daily's market structures cloud. If we go here, we have a, so basically at this we have set number 2 switched on. So basically on the charts, if we go like 1 hour time frame, we'll be able to see dailies, weeklies, monthlies, quarterlies, yearlies, liquidity, all the liquidity levels, market structure breakout levels, and the cloud if you apply. So I have a dailies cloud applied, so you can see that shows me cloud, that's market structures cloud. So basically it provides us with the dailies market structure, so you can visually easy to track. That's the last market structures point, that's next previous one, that's one before, then we have one before, then we have one before and one before, and we can see how market structure been developed. So that will be next one, and if we reverse will be how next one, so on so on. So what does it mean? Why it's helpful? Because it allows us to determine in which phase we are in the market structure. So if we inside in the market structures cloud, we know we are in accumulation, right? Let's cover first what is the market structure's job. Market structure's job is to establish trends and start to trend it. If you are trending, what you're gonna if you are starting to trend, what you're gonna what's the market structure's target? Our market structure's target, let's focus just on daily. Market structure's target is to target the liquidity, right? So let's say we have this price action right there. So what do we can see? We inside in accumulation. So we are inside in accumulation. So where was the last market structure's breakout level? So last market structure's breakout level was right here, which represent with this triangle, which says that's market structure's breakout. So what we can read from this price action again, we were inside in the market structures cloud. That's mean we in accumulation. So what's the market structure's job? Establish trends and start the trend phase. If we are starting to trend, obviously we can establish trend, either breakout to the low side or breakout to the upside. We can see here we try to establish accumulation. We start to establish bearish distribution. Did we succeed? No, we failed. So if we failed, if we know market failed to establish bearish trend to the downside, so obviously we want to see sign of strength, right? Obviously we want to see bullish accumulation in the cloud. Again, we inside in the cloud, we respecting the original failed bearish trend establishment low being respected. We will have sign of strength inside in the accumulation. If we have a sign of strength in accumulation, that's bullish accumulation. If it's bullish accumulation, what the market structure gonna target? The first liquidity. Where's the first liquidity? Right there. So as soon we provide the bullish break, what's the market structure's job? Take out all liquidity. Bang. Again, that's bullish trend. Bullish trend job is what? Take out liquidity. This is all-time high, so basically we could run as far as we can. What market structure does? Market structure comes back inside in the cloud. What does it mean? It's again accumulation. Inside in the cloud, that's accumulation. Sign of weakness, bearish accumulation. Sign of strength, bullish accumulation. What's provides sign of strength, sign of weakness? Single ranges developing of that in the price action inside in the accumulation. But what we can see from price action, this was the last level of market structures breakout, right? So that level will be market structure storyline, which basically provides us with this market structure breakout. Will represent with the if we go here like this storyline here. So basically we spoke about last liquidity storyline. Last liquidity storyline is basically whichever is last liquidity level swept on daily time frame. So we know that's the price action targets next liquidity, or it fails and gets the sign of strength and strength for market structure, and we focusing back. So before this liquidity storyline, previous time this was liquidity storyline. Look what we had. So what market structure done? Failed to go upside, jump back in the inside. That's bearish accumulation. Bearish accumulation was the market structure's job. Target the first liquidity. Where's the first liquidity? Here. Once it's took out the first liquidity, what we establish? Bearish breakout. If we establish bearish breakout, what's the market structure's job? Take out next liquidity. We take out next liquidity. What is market structure's job? keep going and take out like liquidity. Did we succeed? No, we failed. So what we done? We put the new structural low. We reclaimed the what? Last liquidity storyline. So this level was last liquidity storyline. What does it provide you? It provides you sign of strength. If we have a sign of strength in bearish trend, that's manipulation, right? So basically we have phases accumulation, manipulation, or distribution like trend stage. So either accumulation, either trend stage. If trend stage is failed, that's manipulation. So we're anticipating back inside in the cloud. So what we have here, we have sign of strength on market structure. We establish low day, low the week, whatever. We reclaim the market structures. We reclaim the last liquidity storyline. We want to see either retest of breakout and continue targeting a liquidity, or we're gonna get in, get sign of strength, and target the first liquidity opposite side. If we have sign of strength, we back inside in the cloud. That's accumulation. We will have what? Hive day, you know, sign of weakness on daily. That's bearish. That's sign of weakness. So that's instantly sign of weakness. What's the market structure's job? Target the first liquidity. Bam, bam, bam. We take out the liquidity. What's that? Sign of strength. What's that? Last liquidity storyline flips bullish. We provide support. So as soon we about this market structure storyline, that's what represents market structure storyline, we can see where we had attempts changing market structure's direction. And with the empty triangle, this literally says market structures failed breakout. If we have solid triangle, like, you know, like here at this end, it will represent as market structures breakout. So what is the latest price action on gold? Our latest price action is gold. On gold we have just on daily's time frame, on daily's market structure, we establish bearish breakout. We moved lower, took out liquidity, failed to continue to target next liquidity, came back in the cloud, had bearish accumulation, we dropped lower, we took out again the first liquidity on the bearish side. This liquidity storyline provides us a bullish sign of strength. From this point, if we are failing to continue bearish, we establish failed bearish breakout. Because this breakout failed, we reclaim the level. So if this is, you know, failed bearish break is what? Sign of strength again, right? So sign of strength, we're looking for buys. Sign of weakness, we're looking for sells. So same time we can see on local range, this big formation low provided us sign of strength on low of the day, low of the week, so on and so on. So this was a really nice setup. We discussed it already in the group. So from this price action, we're already targeting this liquidity. We're not just targeting previous range, which will be, you know, Monday's previous Friday, but we're already targeting liquidity. So what's the market structure's jobs? So market structure's job is now take out this liquidity. It's gonna provide what? New market structures break. It's gonna provide us new market structure break. It's gonna provide us bullish market structure break. And we, you know, we bullish on the gold. So what we want to see? We want to see how we establish bullish break and we target market structures liquidity levels, right? So everything is nice and clean. So that's just based on daily. So if we add more levels, high time frames, we will know which liquidity levels are way stronger or where we are in multi-time frame context. Let's add, you know, daily to yearly and see what we have. So it's going to provide multi-time frame sign of strength, sign of weakness based on market structure. So we can see now what this high, these two liquidity levels, they're not anymore daily. We can see they are coming from weekly's market structure points. So these are nice cluster to target for weekly's liquidity. That's weekly's liquidity. If we go back and we can have a look, okay, where are we coming from? We can see this is the last weekly's liquidity level to be taken out. So weekly is bullish, as we can see. Everything, everything been trending. Same as, we go back here, we daily broke out, took out weekly's liquidity terminated where at monthly's bullish market structures breakout. So we had all this push was targeting this monthly's liquidity, came back, retested this weekly's liquidity storyline, daily provided breakout, daily established trend, targeted weekly's liquidity, all the way up in the yearly's liquidity level, quarterly liquidity level. Beautiful. As you can see, from this point there is no any resistance. There was just pure liquidity, and the last monthly's liquidity. We reclaimed this storyline of yearlies, which have been swept. We are already bullish from this point as the monthly and line. So yeah, it's, whoever trades in multi-time frames perspective, who does analysis in multi-time frame perspective, you will be completely clear like what is the applications multi-time frame. But in simple terms, it provides you with the targets as the liquidity levels, which you can focus when you have sign of strength, sign of weakness inside the cloud. It basically provides you bullish or bearish accumulation. Same time, if we swap the sets, we can we look at the small time frames. You look 1 hour, let's say 4 hours, maybe you see 150 minute, maybe with 4 hour cloud intention or 1 minute or something like that. Let me load it in, it's kind of crashing. Alright, so there is more applications we're utilizing regards the market structures cloud. It's based on either market structure is contracting or expanding. Then you pretty much can use impulse correction impulse, kind of recognizing when you have a aggressive push, pullback, and for continuations and so on. But the principles are the same. You're basically tracking, in which phase you are in the market structure, either accumulation, distribution, or manipulation, right? So you anticipating with sign of strength, sign of weakness across multi time frames for that high time frame liquidity. Let me remove the 15 minute because too noisy. But 1 hour for like pretty much it depends on the trader who's scalper. I use 15 minute cloud, just scalping on 15-second chart as well, just basing range to range, that's it. I mean, like liquidity to liquidity from one side to another side of the cloud, providing with sign of strength, sign of weakness. So same here, we failed breakout to the upside on the 4 hour market structure. So what we done, we took out opposite bearish, established bearish breakout. What's the market structure job? Take out liquidity. So 4 hour bearish breakout, 4 hour liquidity, 4 hour liquidity. Lower, at least on this time frame, you can see. Lower there is nothing. So what did this last liquidity level gave you? That liquidity level gave you that 4 hour last liquidity storyline, right? On 4 hour. As you know, guys, in Automa we focus on low of the range, high of the range, and objective sequence for sign of strength of low of the range, sign of strength of the high range. And you have two ways how to read that. You can utilize that using just the range, or you can utilize that using market structure. So over here we applying all this concept on the market structure. Because why market structure? Because it's liquidity. You apply that for liquidity, and this would be perfect example. You can see you have impulse correction impulse, which will be bullish ICI right there. Retest. Obviously the trigger entry, like entry drill is simple, love the range, sign of strength, and look for time rotation and another confluence, power index, mitigations, and so on. Like, look at this pricing here. So again, we inside in the cloud. What does it mean? Accumulation. Does it bullish or bearish accumulation? Low of the day, bearish breakout, failed. We reclaim the level. That's what? Sign of strength. So if we have a sign of strength on accumulation, that's what? That's bullish accumulation. If we have a objective conclusion, this is bullish accumulation, what's the market structure's job? If we fail to take opposite side, and this is new market structure's point, and we have bullish accumulation, we target market structure's job, target the first liquidity. Where's the first liquidity? At this point, the first 4-hour liquidity is here, as you can see this line, while it's the confirm this structural point from here, this is new liquidity. So as soon the new liquidity level is broken, that's what? Bullish market structures break. If we have bullish market structures break, what's the market structure target? Liquidity right there. Done and dusted. Bullish accumulation, bullish breakout, establishing bullish trend, targeting next liquidity. So at this point, what's the price job? Reclaim the level, target liquidity. If we fail, resistance, once we come back in the cloud, or retest the breakout for continuation. Rinse, repeat. You apply this same principle on any time frame as multi-time frame perspective, and you have a context what you want to see. You can see black ones, that's daily. Sorry, the black ones, that's the 1 hour liquidity levels. Red ones is 4 hour liquidity levels. It's like here again, failed market structures breakout. Let's remove that 1 hour so it's clearer for you visually understand. So failed market structures breakout on 4 hour. So this was bullish breakout on 4 hour. So basically sign of strength inside in the cloud, bullish accumulation. What is the job? Reclaim the breakout level, target liquidity, and failed. We failed and failed bearish break. If we fail bearish break and continuation, that's sign of weakness. If you have sign of weakness, what's the market structure job? If we fail to go higher, we're gonna target what? Opposite liquidity. Where's the first opposite liquidity? Right there. We came down, took out the opposite liquidity. What we establish? We establish bearish breakout on the downside. If we have a bearish trend now confirmed on the downside, what's the target? Liquidity, 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 and so on. Wherever is the next level. We don't have a next level, or it's maybe way farther. We drop, we're still dropping. Market pause, creates new structural point. Weakness, bearish accumulation, sign of strength, targeting opposite side. Establishing bullish break. What's the target? Liquidity, or create the new one. We trend up, back in the cloud. What does it mean? Again, trend, accumulation. You don't know bullish or bearish accumulation. Sign of weakness on lower time frames. Weakness, bearish accumulation. Bearish accumulation respects the original high, targeting opposite liquidity, and rinse, repeat. So hope this is clear regards the what the multi-time frame market structure liquidity levels provides. It basically provides you the liquidity levels and provides you the market structure. It provides you the storylines of the market structures phase, and the last liquidity levels, the high time frame context, so on. What else? Yeah, I think that's it. Kinda. There is like info section which kinda gives you the color coding explanations and so on. At some point we're probably gonna look updated this, because I can see latest we added 30 minutes. So yeah, we might to remove maybe, yeah, probably add 30 minutes as well and see if it works. This will be if necessary. Otherwise than that, yeah, it's, you know, one of really great tool, especially, you know, more advanced version we have in Ultima version, where we have a AMD table which basically shows accumulation, manipulation, distribution, and but limited like on specific profile templates, like, you know, like in this case yearly, quarterly, monthly. If you just, you know, quickly show example, what we mean by the market structure phases. Just let it load it in. Okay, like here. So over here you can see we have accumulation, manipulation, distribution. So basically based on which phase we are in the market structure, if we add the, let's say, monthly cloud, which is obstacle time frame for quarterly, probably need to go higher time frame like daily for this high time frame. So yeah, you can see here example. Over here you can see more levels because we applying ranges. So as I mentioned, you know, in the, like here, this is monthly cloud, so that's mean monthly is market structure. Yeah? Like we tracking monthly is market structure with monthly is cloud. You can see the purple is monthly, quarterly is quarterly. You can see one monthly purple, quarterly, whatever color is the pink or something like that, and yearly is this, I don't know what's the color. So basically with the ranges we provide early sign of strength, sign of weakness for, you know, anticipation, market structures, direction. So what we can see here, as you can see, you know, everything is in this icon, which is distribution. So basically what does it mean? Every single market structure breakout is outside of the bullish cloud, and we're trending higher, right? We're trending higher, and what we want to see, we want to see how the ranges support the market structure. And like, look at this daily, some monthly is open, how in lines with the monthly structure, which is super bullish for higher prices. Same time, yeah, like I said, AMD it shows, you know, accumulation, manipulation. Whenever we were inside in the cloud, that will show, you know, accumulation. So if it's an accumulation, you know, what we want to see for bullish accumulation, sign of strength, we can see we have this monthly peak formation low. That's, you know, low of the month, monthly peak formation low. That's sign of strength. Retest of monthly market structures breakout. Absolutely huge levels for targeting what we are not from this point of this sign of strength at low of the range sign of strength on this monthly structure. We're not just focusing on previous range, but we're already focusing on this market structure level. Why? Because market structure's job is what? Target the liquidities, right? Peak formation is just a local range liquidity. A real liquidity, what we want to take to sweep out for establishing, because we want to align with the ranges into market structure's direction, right? So it should provide you context. What is the market structure's intention? So yeah, hope this helps. This will be in the, like, basically guidelines regards the market structure liquidity levels, you know, and a bit look into, you know, accumulation, manipulation, distribution. So thanks for this. Today is like quick one, short one, and